This right here, if I just had to show you one thing and one thing only from everything I had to show you in this video, this would be the thing right in front of your face right there. I would show you that before I showed you how much Palantir beat analyst expectations and my valuations models for the stock. This would be, if I could only show you one thing, this is it, okay? What I'm showing you there right now is a very famous thing if you ever have valued more like SaaS-related type companies, right, which Palantir kind of gets put into the software as a service type business model, right? Even though they might differ a little bit, they get put in that category. And so when you're judging these sorts of business models, there's something called the rule of 40 that's extremely important and everybody always looks at. And it basically, if you're over 40 when it comes to year-over-year revenue growth and then adding adjusted operating margin on top, if you're over 40, usually that's seen as like a very healthy SaaS-related number. And the more you are over 40, the more special you are. So let's say you're at 45%, 50%, 55%. Now people are looking like, oh my gosh, this company's very special. They got big revenue growth. They got great operating margins. This is a very healthy company. If you ever go under 40%, people start to worry about you. And the further you go under 40%, the more people are like, oh, this is not looking very good for this company, right? Palantir is at a shocking 68% when it comes to rule of 40. This is ridiculous, right? This was a time period where people were a little concerned about Palantir because they were at exactly 40%, 42%, 38%, but then they've just been increasing at 46%, 54%, 57%, a shocking 64% last quarter, and people are like, it can't go any better than that. And then they put up a 68% number, and now people are like, could they be going rule of 70? Is this company going to go 70% plus here in the next quarter? And it's a real potential. So if I had nothing else I could show you in this video, that's it. And that's just like, you're dealing with a very special company when you're talking about these sorts of numbers. And ask anybody that's ever valued these sorts of SaaS companies, and they'll tell you this is ridiculous. That's special, like the 1% of the 1% special, right? Additionally, when you look at their income statement of this company, this is an A+. Perfection income statement. So look at revenues. Revenues went to $725 million from $558 million. That was like a $167 million gain on just a year-over-year basis in a 3-month span. That's insane. Cost of revenue only went up $39 million roughly. So gross profit was up around $128 million year over year for this company. Sales and marketing, they kept that in check. Now, they increased all these spends, but the thing is, their revenue was up $167 million. So they had a lot of room to weigh up sales and marketing, R&D, and G&A if they wanted to, but they didn't really do it. They spent more on all categories, but they kept the expenses in check in a major way, which just proves Alex Karp and the CFO of the company are really watching the expense profile of this company. And they're really focused on not just growing for growing's sake. They're really focused on growing big revenues, but also the margins of this company. Income from operations grew to $113 million versus $39 million in the same quarter last year. Oh my gosh. The interest income continues to pour in for this company. This is a crazy number. Like, I really want everybody to understand how crazy this next number is. They had interest income of $52 million in a 3-month span for basically just having their money in treasuries. How crazy is that, man? I mean, they're making over $15 million a month for just having money in treasuries. Like, imagine that. Imagine having a life where you can make $15 million plus a month for just having your money in guaranteed treasuries. It's like crazy, right? As far as other income expense, they had an $8.1 million kind of more one-off expense versus a $3.1 million gain there. So that's over $10 million. It's like over $11 million of kind of difference there on a year-over-year basis, right? Which kind of hurts profitability, but their income from operations is so ridiculous. It still makes their net income look insane, right? Their net income went to $149 million this year versus $73 million in the same quarter last year. So they over 2x'd their net income. That's unbelievable. And did they even close to 2x their revenues? No, their revenue was up 30%. So when you can over 2x your bottom line and your top line is up 30%, then essentially so their bottom line's up over 100%, but their top line's up 30%. That means essentially, 70 cents plus of every dollar is heading down to that bottom line. That's special. That's very, very special of the new money coming in. So basically, the way to think about this is for every little bit of extra revenue dollars Palantir has coming in, a lot of that dollar is making its way down to that net income line. That's incredible, right? Look at the balance sheet. You want to talk about a fortress balance sheet? Look no further than this. So, I mean, this is what's crazy about Palantir. And you're not going to try find another company like this. How many companies have an A+ income statement, right? And additionally have an A+ balance sheet? How many? Not many. Not many. I'm talking there's probably 20 or 30 companies in the entire public markets that have an A+ income statement and an A+ balance sheet. Like, you are the 1% of the 1%. And to think this company just got in the S&P 500 and they're already one of the most special companies in the world, that's crazy. Look at this. If you add up the cash and cash equivalents and marketable securities, they're well over $4.5 billion. That's incredible, right? Jeez. If you look at total liabilities, you add up all the liabilities on the balance sheet. They're at less than $1.2 billion, and they got over $4.5 billion in cash and marketable securities, cash equivalents. Like, that's ridiculous. So total stockholder equity on this company, about $4.5 billion versus $3.4 billion at the beginning of this year. These numbers are historic. Now, look at this. Ready to have your flapjacks flipped? Start looking at this. Look at this. 54% year-over-year growth in U.S. commercial. U.S. commercial business is booming for the company. Additionally, they had 13% quarter-over-quarter U.S. commercial revenue growth. I mean, a lot of companies had trouble growing 13% on a year-over-year basis. They did 13% on a quarter-over-quarter basis. That's ridiculous. Now, additionally, this is where you can get very excited about this company. They grew 77% year-over-year U.S. commercial customer count. Now, keep in mind, their revenue was not up 77% or even close to that, right? It was up 54%. So the way I would look at this is this essentially means there's likely bigger revenue growth acceleration probably coming in this company. Like, the revenue growth acceleration might not be done in regards to Palantir. Because at some point in time, these two numbers are likely going to get much more in line with each other, where this number's been far outstripping this number, okay? Because when Palantir lands a customer, they don't always land like a big contract rate initially. Sometimes they do, but a lot of times they won't, right? They have that relationship built there, then the company realizes how valuable Palantir can be their business model, and maybe it can save them an extra $100 million every 2 years. And so next thing you know, right, the company signs a $100 million contract with Palantir over a 5-year span, right? Because they look at it and they're like, man, we can get a huge positive ROI on this if we go with Palantir, right? Now, additionally, look at this, 73% year-over-year U.S. commercial remaining deal value. Woo-wee! That's an incredible number there. Look at GAAP net income for this company, generally accepted accounting principles. They're up to $143 million, right, from $71 million at the same point last year. It's a big milestone when you can get to 9 figures of net income, right? Not that many companies can do that. But when you start talking about multi-9 figures a year of GAAP net income, you're in a very special league. And they're going to be there like that. And we're talking, this is just each quarter. We're not talking about on an overall year. We're just talking about per 3 months. Oh my gosh, right? Special. Now, check this out here. Look at the operating income of this company. It went from $40 million at this time last year to $113 million. Jeez, like, that's ridiculous. Like, almost 200% growth year over year. No, 2 years ago, the bears were saying, Palantir, oh, big deal, they're starting to make money on the bottom line, but you know what? They can only make money from treasury bills. And that was the bears' argument at first. They're only making money because of treasuries. If, the Fed lowers rates and the treasury money goes away, they're not going to make any money, right? Well, Palantir showed them, no. We're going to make operating income. And they started making operating income. And then people were like, oh, it's only a small amount of operating income. They can never blow it up to a big number. This latest quarter, they did $113 million of operating income, and that's showing no signs of going down. Like, they're going to continue to build that number significantly. Like, at this point next year, we could be looking at this same quarter, we could be looking at $200 million to $300 million of operating income for a Q3 2025. $200 million to $300 million of operating income we could be looking at at this point next year. Keep that in mind. Whew. Now, look at the rule of 40, as I spoke about earlier, year-over-year revenue growth plus adjusted operating margin, 68% for this company. Where's the top at? I don't know. I'm guessing it's somewhere around 70 to 72%. The top's probably coming soon in regards to this one, but who knows? Maybe it's not. Like what happens if they just keep growing this number steadily for like the next 2-3 years? Like that's a potential. What if next quarter is like 69%, then it's 70%, 72%, 73, 74? Like that's a potential as well. Don't rule it out, right? Now, U.S. revenue growth is where the real strength is for this company, right? 44%. If you look at U.S. commercial revenue growth, 54%. And, a lot of people were too bearish in regards to their numbers here. And I'm talking analysts, and I'm talking a lot of retail investors as well. And a lot of people were too bearish with their numbers because they forgot that all the big government deals were coming through. Government had been lagging big time, but a lot of government deals came through over the summer, right? And so that was going to add up to the revenue in this particular quarter, and sure enough, it did. And so U.S. government revenue ended up growing 40% year over year. So that was a great number by Palantir. Commercial revenue growth, 27% overall. Now, keep in mind, U.S. commercial revenue growth was 54%. So your brain should tell you something here. Just to say something's off. What is off? International is insanely weak for the company. Insanely weak for the company. Because the fact that they did commercial revenue growth of 27%, but the U.S. was up 54%, that means international is like lagging bad, right? Total revenue growth was 30% for the company, but yet if you look at U.S. government, that was up 40%, right? Look at U.S. revenue growth. U.S. revenue growth was up 44%, but the company's total revenue growth was only up 30%. So your brain should say something's wrong here. Like, what's going on? International is insanely weak. Now, there's two ways you could look at this, right? One is you can just say, man, like Palantir is never going to be able to do good numbers in Europe. Like international is just insanely weak. What is it with those Europeans? They not care about technology, right? You could look at it that way. I look at it a little bit different. Europe will adopt these technologies. Europe will adopt Palantir. You just can't, you can resist it at first if you want, but you're going to start to understand like Palantir is going to be a game changer for your business model and for government agencies. And so it's just a matter of time before the European market and international in general starts to pick up substantially and start helping Palantir substantially, right? And so right now, the international business, just think of it as a massive headwind on the company. Like, oh my gosh, like, you're running up a hill and the wind's just coming against you and you're like, oh my gosh, this is brutal. That's Palantir right now when it comes to international business. I don't think it's going to be like that forever. I think actually in 2025, in 2026, that headwind could actually start, keyword is start, to move to a tailwind. The European market is just slow, and that's why Europe does not have the top tech companies. This is one of the key reasons why U.S. companies end up running the world, right? And then Europe just tries to figure out how to regulate stuff. But you look at all the top real big tech companies, the ones that matter the most, the ones that have the hundreds of billions of dollar market cap, the trillions of dollars, they're all U.S.-based companies. Because the U.S. moves fast with tech. We adopt the technologies, we get it going. Europeans, they're a little slower in regards to getting this tech over, but they will get it. No different than they adopted every other technology over time. And so just that is something to keep in mind there. The European market and international in general, it will go from a massive headwind to a tailwind in future years, and that's going to help out growth rates substantially. That's still coming, okay? Now, here's the other part. If you look at total revenue excluding strategic commercial contracts, right, kind of the SPAC situation, revenue actually would have been up 32% in the quarter. This has been another major headwind. So we just spoke about international has been a big headwind on the company. This whole SPAC situation has also been a headwind on the company for really the past year or so because they kind of moved out of that space. But this was something that's been weighing against results, and it weighed against the results again, right? 32% would have been their revenue growth rate if it wasn't for this. So this starts to become really a non-factor in 2025, which once again is going to be something that's going to help out Palantir's growth rate. So once again, this growth acceleration phase that quarter in and quarter out, people start thinking like it has to be over, like the growth acceleration, they can't do it anymore, there's no way. This might not be done, folks. We might still be going higher with revenue growth rates. We might go to 31%, 32%, 33%, 35%, 37%, maybe a 40% number. I'm not going to go that far, right? But the story is likely not over in regards to growth acceleration, right? Now, additionally here, check this out. We continue to invest aggressively in AIP, and the US while driving operating leverage at scale. So they show their Q3 2024 adjusted operating income, $276 million, and that was a margin of 38%, adjusted operating margin of 38%, which is shocking, right? Once again, if we look at this quarter last year, 29% was adjusted operating margin. So they improved 900 basis points. 900 basis points on just a year-over-year basis. You got to be flipping my flapjacks. Look at U.S. commercial customer count here. 77% growth year over year. Customer count in general is up 39%, and commercial customer count was up 51%. And imagine when the European market actually starts rolling. Imagine that. In the rest of the world in general. Like, holy smokers, that's going to be no dang jokers, right? Now, additionally, check this out. They did 104 deals in the quarter that were at least $1 million deals. Once again, Palantir is working with the big money folks, right? They did 36 deals of at least $5 million, but the most shocking number of all of them, in my personal opinion, was that number, 16. 16 deals in the quarter they did, which were at least $10 million. Incredible number. Now, this is very important here. This is very, very important, the cash flows of this company. So if you look at cash from operations, 58% margin, $420 million in the quarter. But adjusted free cash flow was at a 60% margin, $435 million of adjusted free cash flow in the quarter. What? And that compares with this same quarter last year, they were at $141 million. Oh my gosh. A 25% margin to a 60% margin when it comes to adjusted free cash flow. Like, these numbers are startlingly good. Like, it's ridiculous, right? This is crazy, and we'll talk about in a moment what they're going to do with all this money, because it's a lot of money, and it's not going to stop coming in anytime soon, right? Now, in terms of their guidance here, they guided for $767 million to $771 million. Keep in mind, they'll probably beat that number. Probably. Now, I would not expect a huge beat, and the reason being is this quarter they're in now, this is October, November, December quarter, right? Holiday season, and you also have the election. And so a lot of companies are a little more on edge about doing a deal in this particular quarter. A lot of them will be much more happy to do deals in the first quarter of 2025, so Q1. So I think they could potentially beat the numbers they put out there, but I'm not expecting a gargantuan beat like this past quarter was, where they blow analyst expectations, because they did $726 million this past quarter. Analysts were at about 703. So that's a substantial beat. They beat by like $23 million, right? I'm not expecting that big of a beat. I think it's going to be a much smaller beat next quarter because of the just kind of companies move slow in the holiday season, right? People are on vacation, and the election, all that stuff has to happen, right? Q1, people get back to work and they start doing deals, and they're like, let's make this happen, right? So that's just something to keep in mind there. But remember, analysts were at $744 million for this next quarter, and their midpoint guide is $769 million. So basically their midpoint, Palantir's midpoint, is $25 million ahead of where analysts were at on average. That is substantial. Adjusted income from operations are talking about a midpoint of $300 million. Like I said, the money's not going to stop pouring in. It's just going to get bigger and bigger. Now, here's the thing. I had predictions. I put my predictions on X. I don't know if you guys follow me on X or not. If you want to follow me, I always keep that in the description area of all my videos. I keep my Instagram down there, and I also keep my X page if you're ever interested in following me on Instagram or X, right? But I posted this on X here today. I said my prediction for Palantir earnings. I said EPS comes in at 9 or 10 cents. Analysts were at 9 cents. The company came in at 10 cents, right? I said revenue is going to come in 705 to 725. Analysts were at 703. So I was much more, my midpoint was basically 715, so I was about $12 million ahead of where analysts were at. And they even beat my numbers. They came in with 726. So even though I was bullish, they came in and even beat my bullish outcome, which is pretty dang impressive. Now, I said for the December quarter, I think the guidance is going to be $760 million to $800 million. Analysts are at $744 million. So my midpoint was $780 million for the guide. The company came in and guided $769 million for their midpoint of the guide, right? So about $11 million under my midpoint. But keep in mind, they might still end up hitting my number. Like, they might still hit my number or get very close to it. Maybe they do a 777. Oh, that would be a good sign, right? How would you like access to all my best course curriculums? My Becoming Master of the Stock Market course, my Stock Market Investing Mastery course, my Stock Options Mastery course, my Millionaire Playbook. How would you like access to all my best courses as well as the ability to have access to my 6 and 7 figure plus Discord community, where we're constantly keeping in touch with each other, talking about what's going on in the market. How would you like exclusive weekly videos from me? How would you like the ability to see what stocks I'm buying and selling in my $2 million plus Fidelity account? If that all sounds pretty interesting to you, apply to join my private group. That is going to be linked in the description area down there. You can click on that, fill out an application, and go ahead, hop on a call with Andre. Andre will walk you through the whole process. He'll walk you through the whole group, and you can go ahead and join us in there. Once again, the link for that is in the description area. So, Palantir. Let's start off with Palantir, and then we'll go from there, okay? We'll do it in order. So, Palantir, a couple important things to understand is clearly the earnings per share trend is up and up and up. They went from negative 1 cent to positive 1 cent, to positive 4 cents, then 5 cents, 5 cents, positive 7 cents, then 8 cents, 8 cents, and then the latest quarter, they did 9 cents of EPS, right? So there's clearly a trend of earnings per share building and building. It's going to be very important when we look at what's expected for this quarter and what's expected for next quarter from analysts so we can kind of understand is this company likely going to beat or miss. Additionally, revenue's been building for several quarters now. We went from 12% revenue growth to 16% revenue growth to 19% to 20% to 27% revenue growth. So the revenue growth rate has been expanding and earnings per share has been expanding as well. Now, additionally, here's what analysts are expecting. So analysts are expecting 9 cents for this. Keep in mind, there's not, whenever a company goes to report earnings, like Palantir is about to report their earnings, right? It's not just about what has the company done for this past quarter. That's important, but even more important is guidance. So if the company gives any guidance about what they are thinking likely for earnings per share for the upcoming quarter, for revenue for the upcoming quarter, that honestly a lot of times matters even more than the previous quarter. So keep that in mind. So analysts are at 9 cents EPS for not only this quarter they're about to report, but also the upcoming quarter after that. Additionally, they're at a 26% revenue growth rate. So the analysts are expecting on average a deceleration in the growth rate, which would be a break-in trend because the trend has been for 5 quarters now in a row of just revenue growth rate gets higher and higher and higher. This would be a reversal of that, essentially. We'd be decelerating the growth rate, right? Down to 26%. They're expecting $703 million of revenue. Now, keep in mind, Palantir is a business model that just keeps building on itself because it's more of a SaaS kind of type of company, right? So their revenue just builds pretty much quarter in, quarter out. It's not like a retailer that might have a big one quarter and then a big fall off the next quarter or something like that, right? So 678 is what they did the previous quarter, right? And that was a build there of about $44 million, right? So, and then here they're only expecting a build of about $25 million, right? Because 678 plus 25 would be right about 703, right? So that's important to understand that the expectations here for this current quarter are not that extreme. And then they're expecting around a $41 million build out in revenue for the following quarter, but once again, another major deceleration in the revenue growth rate down to 22%, okay? So the moral of the story is if you look at these numbers, I would say these numbers, and we'll speak about what I'm expecting here in just a moment, but if you just look at them, are they beatable? That's the first thing I'd like to think about. If for any stock I hold, are the numbers beatable? If you look at these numbers, they're beatable. These are beatable numbers. The earnings per share, they're expecting not only for this current quarter they're about to report, but the future quarter, the same exact EPS as the previous quarter, even though Palantir is not really adding a lot of costs to the business right now, and their revenue is going to go up substantially. Very beatable earnings per share there. And then if we think about revenue, that looks very beatable as well, just to be quite frank, right? So what am I expecting? Here's what I'm expecting. I'm expecting for this current quarter when it comes to earnings per share, I'm expecting roughly in line with what analysts have, potentially 10 cents of EPS, right? Now, for the upcoming quarter, that's where I diverge quite a bit from analysts. Analysts are at 9 cents of EPS. I think they're at the low end, they would do 10 cents for that quarter, but potentially up to 12 cents of EPS in that December quarter, which is a pretty big, kind of difference between where analysts are at versus where I'm at. I'm looking and I'm saying, the treasury money is going to continue to pour in, right? All the money they're making in regards to all the T-bills they hold, that money's going to keep pouring in, right? Additionally, the revenue continues to build out, and they're not adding much cost to the business model, so I don't see any reason why they can't do a minimum 10 cents in that December quarter with potentially upside to 12 cents in that quarter, right? So the earnings per share, I think, is in the bag as far as that potential there. Now, as far as revenue goes for this quarter they're about to report, I'm expecting on the low end $705 million of revenue to potentially $725 million of revenue. That's versus analysts are at 703 here. So I think analysts are a little too, on average, that is, right? I think analysts are a little too modest. A little too modest in regards to their revenue expectations here. The government deals are pouring in, the commercial deals continue to pour in, right? And additionally, a lot of these commercial deals and commercial clients they signed up for, not much revenue here at the start are likely building out to be bigger and bigger contracts, those sorts of things. So I think this number is a little lowball. Additionally, I think the next quarter's lowball as well. They're at 744, and I think they're probably going to be 760 on the low end to potentially $800 million on the high end when it comes to revenue. So I believe analysts are off on both of their expectations there. I think they're just too low, they're too modest in regards to their expectations there, right? Now, what's going to happen with the stock price? Okay, so here's what happens with the stock price, in my opinion. If the company comes through and they report for this past quarter, right? They report a 30% plus revenue growth number. And then additionally, they guide out to a 30% plus revenue growth number again. I believe the stock's going $45 plus in that situation. 45 plus, we'll see a new all-time high on Palantir stock, maybe even the stock pushed to 50. But they got to have a 30% plus number for this past quarter and 30% plus guide. Because if they could do that, if they could report a 30 and then guide out to a 30, then everybody would be convinced that this is once again a growth company that is at a 30% type clip, and people are going to flip their flapjacks over that, okay? Now, if the growth rate for this past quarter and this upcoming quarter is somewhere between that 25% to 29%, then I think the stock maybe downtrends a little bit, but not like fall off a cliff. I think $35 to $40 is what we're looking at, by the end of the week. Let's just call it that. If the growth rates are somewhere in there, because I think that would be a little bit of a letdown. Some people are kind of thinking like, and kind of keep that growth rate. But if all of a sudden we saw deceleration, I think it would be a little bit disappointing, right? So I think the stock would just kind of like flounder. It wouldn't really do much, right? Maybe downtrend a little bit. Now, on the flip side, if we went under 25% growth rate for revenue, under 25%, so meaning 24% or below, right? For either this quarter they're about to report or next quarter, I think we crash big. And when I say big, I'm talking down to the low 30s, somewhere between $30 and $33. That would be a big crash. I'm pretty convinced of that because, it would not be good. Okay, that would not be good. A lot of people's expectations are much higher. Now, the important thing I need to tell everybody in regards to Palantir stock, I think this is very important. I mention this right now. Okay, listen. With these sorts of companies, when you own what you believe is a game-changing company over the next 10 years, and if you really believe Palantir is going to be a $500 billion market cap, a $750 billion market cap, a $1 trillion company 10, 15 years from now, right? Don't get freaked out over the revenue growth rate. Whether it comes in at 27% for this quarter, 26%, 29%, 31%. If you are a believer, this is going to be a $500 billion plus market cap over the next 10, 15 years, don't get trippy over the revenue growth rate in the short term. Because at the end of the day, whether they're growing 26% or 29% or 31%, right, in the short term, it is what it is. If you really believe this is a company that's going to be a company that starts throwing off billions of dollars a year in net income, okay? So focus on the long term. Listen to the conference call. Make sure the business is aligning where you need it to align. But a lot of people are going to be flipping out whether the revenue growth rate is just a few percentage higher or lower. Don't be part of that bunch. Be part of the long-term bunch that you're either focused on like this is the next massive tech company or it's not. But don't let your judgment be clouded by if revenue percentage growth is a few percent up or down. That's what I'm going to say about that, okay? Because there's going to be a lot of people that are going to do that, and those people might just look back long term and be like, dang, I kind of made a mistake in regards to that, right? So keep that in mind.